Hi, everyone. My name is Alan Crabb, and I'm co-hosting this session today. Just before we get started, I'll just give everyone just a few minutes to get in. Just before we get started, I'm just going to include some links in the chat. So if you look on your Zoom chat, we share some links. I see it's useful to get a bit of a brief on who we are and a bit more details on Unhedged while we're waiting. And also, I'm sure most people are familiar with Zoom now, but if you do have any questions, look to the Q&A function at the bottom of your screen and have your questions available. I'll be running the Q&A session with the audience a bit later on. But yeah, go ahead and prepare some of your questions here, and I'll keep an eye on these as well later. So just before we get started, yeah, we'll just prepare any questions and yeah, check out any links we have shared here in the chat. Are you ready?
All for the difficult questions.
All right, I think we'll get started. So as a quick intro, my name is Alan Crabb. As I mentioned, I'm the co-founder of Virtual. Virtual is an equity crowdfunding platform, and we have the responsibility and privilege to be licensed to provide high potential, like Unhedged, a platform to pitch themselves and also facilitate investment from anyone. Before we get started, I just want to run through how the session is going to operate. We want to be pretty short, snappy with this Q&A session. So I'll help facilitate this and keep it flowing pretty rapidly. We've also got on the webinar here, Ash from Virtual, who will be helping facilitate some of the Q&A, particularly the frequently asked questions that we typically get from our community on our deals. And also we've got Peter Becker, who is the CEO and co-founder of Unhedged. And we'll get to learn a bit more about Unhedged and his story very soon. So what I'll do is I'll hand it over to Ash to get started, to do a quick intro and to facilitate the initial questions, and then I will facilitate the questions from the audience. So it's pretty informative, and we want everyone that's participating as part of this webinar to get as much out of it as possible. Yeah, please feel free to ask any questions throughout as well, and I'll keep on the chat as well. So yeah, let's get started, and Ash, I'll hand it over to you.
Alrighty, thanks very much, Alan. Hello, everybody. I am Ash. I work within campaigns at Virtual. And Unhedged, I've got to say, Peter, is one of my favorite campaigns that I've worked on, not just because you've got a great company, but also because your energy is very contagious and also very exciting. So I know all about yourself and about Unhedged, but for everybody else's benefit, why don't you just go ahead and introduce yourself and tell us why it was important for you to get started on Unhedged?
Yeah, good. You know, I was in my life, I was lucky and a little bit skilled that I had the luck that I had a company in 1997, and I sold it in 2001. In 2001, as most people know, that was a fantastic time to run a startup. But when you exit a startup, then you have some money, you're too young, and then you have to find people to manage that money. At least that was what I wanted to do. And from there on, I started to really think, doesn't seem to be a very efficient process. And after a few years, I decided to use algorithms to run my own money through and to make more money of it. And I became better and better at it. And at one point, I became one of the key developers of Zipline, Zipline Live, which is it's the biggest Python package that hedge funds use to backtest, and a lot of people use to live trade on the American markets. And working on it so hard and so long, and visiting conferences and speaking at conferences, I thought, this is a really strange way to do it, because what we're doing now is we enable hedge funds to do even better. And most hedge funds don't let other people into their midst. So then I thought, so how can we make this algo trading more accessible to more people? And then I started basically to think about Unhedged and how Unhedged could be structured in such a way that we can do it for normal people like you and me, right? We don't need licenses like that you have to be a wholesale investor or that you have to be a very sophisticated investor. No, normal people. And that's the hard part, because most of these algorithms in hedge funds, they use advanced instruments like futures, options, other things. And so I had to make these algorithms such that they can trade things that you and me can trade. And that's how it started, basically. And so for the past 3 years, we've been experimenting with several versions of it. And now in the past year, we've been accelerating really hard. And yeah, I'm glad to have found you guys that Virtual gives me a platform to show this to more people and to give more people an opportunity to invest in the business, but also later to become a client of us. So super cool.
That's absolutely fantastic, Peter. Like you mentioned, the market that you're operating in is actually growing very, very quickly. So I'd love to understand a bit more about your traction and the traction that Unhedged has got so far.
Yeah, well, but you know, we see self-directed investors as, in the end, our end clients, and that market is growing really fast for a few reasons. First, there's an accumulation of wealth in the world, but secondly, more and more people get a little bit annoyed with the chain in the financial management industry. It's like you go to a financial advisor, he charges you 0.5%, and then you go to an asset manager, he charges you 1%. So by the time you are basically invested and gaining wealth, you actually are a few percent in the hole. And if you compound that year after year, it has a huge influence. So that's one. The second thing is why this market is growing really fast, or the third thing is the interest rate environment. At the moment, we have only, on savings accounts, is 0 or 0.5 or 1%. And that means that your money compounds slower than the inflation. And that means that, in fact, you're losing money. And more people are looking at ways to invest. Well, you have several ways to invest. You can go to a financial advisor, which is for a lot of people a good solution. And you have a lot of people who say, no, I can do it myself. Well, if you do it yourself and you bring your own strategy, you have to think about it. And you have to really look at how much research you have to do this. And another option is to go to things like StockSpot or Spaceship, other like global investors that are doing really well. But what we're trying to do is a little bit different. We feel that the industry is a little bit lagging when it comes to applying AI and machine learning. And we really want to bring this new technology to investing and make it accessible for normal people, for everyday investors. So going the traction of the company, I sent you in advance a slide, but there you can see how fast the waiting list is growing. And we were absolutely amazed and really stunned by the speed things take. We have now more than 4,000 people on the wait list, and it grows by more than 100 every day. And also the fact that we have now something like 1,250 people having an EOI expression. Amazing, right? So And the interest. I mean, we were in the AFR last week, and even the AFR, they were pretty enamored with the idea that we're doing things a little bit different because, you know, you can mimic a current model as long as you want, but yeah, doing things different and making it robust and making it a better result is in the end what's good for everybody.
Absolutely, that's amazing. When I first spoke to you guys had around 100 people on the wait list, and in a matter of say around 3 weeks, you guys managed to get that to around 4,000. That is very, very impressive. And you talk a lot about algorithms that are used on Unhedged. So what exactly do these algorithms do, and how do you set yourself apart in this market?
Yeah, so algorithms is a very broad word, right? Because algorithms are used everywhere in daily life. Even your run-of-the-mill traffic light uses an algorithm. But when it comes to algorithmic investing, what we mean by that is that we have developed several algorithms, and we will go live with 3 that determine stress or upside or downside into the market based on different signals. So they look at different types of data. So you have volatility data, you have price data, you have Twitter sentiment data, you can do analysis of the pictures from satellites. There's several algorithms that look at the temperature of certain steel mills, and then you can determine whether there's more steel output or not. So what we did is we created a lot of algorithms that use price data and alternative data, and then take that data and draw a conclusion about the direction for that algorithm. And that determines basically whether we are invested in something or not. And so hence, it's because we are, as humans, we can only look at so many data points. But these algorithms look at thousands and thousands of data points every single second. And so they're very quick at changing. And it doesn't mean this is not high frequency trading. This is not frequent trading, because our average holding period we have in our algorithms is 18 days, but still a lot faster than most people would do with their own account, right? And what algorithms are also better at is finding anomalies. So finding anomalies in stress, in volume, in direction of the markets, or in other data points. And so that's what we mean by algorithms. So why is that different? Well, if you look at most advisory services, or if you look at robo-advisors or at asset managers, what they use is a modern portfolio theory. And what they do is they take, for example, 30% bonds and 70% equities, and then every few months they determine whether that's the right ratio, and then they put more or less in one or more asset class. Our algorithms are much faster to draw conclusions about the market. And what we are doing, we're combining these 3 algorithms to create one, hopefully more stable return stream. That doesn't mean there's not a lot of downside. I mean, this is still investing, and everywhere where there's return, there's risk, right? So that needs to be very, very clear.
That's amazing. Thank you very much for that. And I've got another question for you, which is fundamentally, you guys raised pre-seed capital of just under $1 million recently. Yeah. So why exactly are you raising through Virtual at the moment, and what do you plan to do with the funds?
Yeah, that's a good question. So why was, for me, private equity funding is, for me, very aligned to what our company stands for. Yeah, Unhedged really wants to create an environment where we create and offer more advanced investment tools to people like you and me. And private equity funding allows people to invest in companies they could never invest in before, either because it's not available, but there were no platforms like virtual. So it's on one end, I think you guys have the same mission as we have. And for me, that was very important. The second thing is that I was with my team thinking, so how can we get the word out very quickly? And how can we align ourselves with the people who invest in us? And then we thought, oh, crowd equity funding is really a good way because first, there's a lot of people who become your advocates. And secondly, they provide capital for you to grow. So what do we do with the capital? We just build our team. Because this is a team, this is a game which is, or a game, this is a company that is built around two things, the team and how do we market it, right? And so we need to bolster our team in the tech departments. We want to insource some of the stuff we have now outsourced. So we build our app now basically all over the world. We have tested it now in test flights in Apple and in the Google App Store. It's not live yet, so we're still in closed beta. And what we want to do with the investments that the virtual members will provide is we want to grow the team and we want to create more algorithms and improve algorithms. And because algorithms in the end, they have a limited life. They will at one point will become less effective. So you have to make sure that there's a quant team that continuously improves and continuously launches new equities. One of the things I'm really passionate about is ESG investing, environmental, societal, governmental, responsible investing. And we really believe that we can build an algorithm that incorporates positive contribution to society and make that a positive contribution to somebody's investment strategy. And we're really passionate about that, but that, for example, that data is incredibly expensive. So one of the things that we will do is use the funds to buy data.
That is fantastic. And I've got my final question, which I'm actually really, really excited about. So everybody from the Unhedged team is actually from a very exciting background. Peter, yourself, you've exited 2 businesses previously and have worked with the likes of Google, and your CTO is an ex-CERN researcher with a background in artificial intelligence and analytics. And you know the market that you're operating is actually very, very competitive. So what exactly about your team makes you have that advantage over other people?
Well, it does help when you have built companies before, right? Because building companies is a skill, and as I said, in the late 90s and early 2000s, I did that once. And when you do it the first time and you exit, that's actually quite a bit of luck, but you can learn a lot from it. When you do it the second time, then it's less luck, right? So then it becomes a skill. And so that's one. The second thing is that we were quite well capitalized from the start because I had a few other people hearing about what I was doing. They were very eager to fund this project. And then you start to attract capital. After attracting capital, you start to attract talent. And at the moment, I must say, everyone in the team are absolute rock stars, and we are in the space of hiring a few more. That's absolutely, when you see them, you think, yes, these are extremely good people. I'm also very passionate about to bring a little bit more balance in terms of gender in the team. We are now more men than females, so I would love to get more women in the team. And yeah, it's you know, it's like when you start to build a venture, you actually are convincing people that this is a good thing. And then you roll the boulder up the hill, you roll the boulder up the hill, and you have to basically counter a lot of naysayers. And then slowly you feel that gravity starts to work for you. The boulder starts rolling. And then you just need to push and guide it the right direction. And I think and actually Birchall has helped with that. We're really on that point that we start rolling downhill, and we just get the acceleration, and it's really exciting.
No, that's absolutely phenomenal. That was all the questions for me. I could keep talking about your business all day, but I see that we've got a few questions from everybody that's attending the webinar. So I'm going to pass on to Alan to address a few of these questions.
Cool.
Thanks, Peter. Actually, and I absolutely agree. Actually, like the alignment with what we do, particularly in accessing retail investors or everyday Australians into these investments and opportunities that wouldn't otherwise be available to them, is completely aligned with what we do as well. So with that, let's go to some of the questions actually, and I think we may have addressed some of these, but let's maybe start from the top. If you can see Peter as well in your Q&A tab. The first question here from Dale, are there plans for more algorithms? So you touched on some of the social impact related investment algorithm, but have you got a roadmap and a pipeline for algorithms outside of, I suppose, the core three that you talk about, particularly on your website or in the investment documents that are due to come out soon?
Yeah. So there's next to the, so one thing I didn't touch on, next to the algorithms itself, there's also a meta algorithm that looks over the algorithms and then can rebalance it automatically if people choose to do so. So what we not only can combine it in an equal weight or whatever personal weight you think is a good weight, we can also do it intelligently. So yes, there are more algorithms in the future, and there's a lot of research out there, academic research, that we're looking at and that we're assessing. I must say that academics are not always in the trading environment, so they often discover things that are not really working in the real life. So we have a process, and that process means that we have a 9-step process that allows us to assess whether what we're researching is actually valid. And then by the time that's in step 9, then we have deployed it already before we expose it to customers. We have deployed it with our own money. We have deployed it with the company's money. So it's really the process that we continuously improve and continuously build new algorithms. And yes, so we will. And especially when we can get more alternative data sources, then we do something that other people are really not doing for everyday investors.
Yeah. There's a question here from Corey. What other companies use the 20% over benchmark revenue model? And how has this been received? Yeah.
Yeah, so the 20% over benchmark is something that is used by a lot of more advanced funds, usually only available for the wholesale investor or sophisticated investor, and it's an often used model. They in the US they often say the 2-20 model. So you pay 2% per year plus 20% of the overperformance. I think 2% is a pretty steep start in the beginning, so I don't think that's a really good start. But the 20% we kept, and that basically means that, for example, the benchmark does $100. We do $120. Then only the difference between the 100 and the 120, we charge 20% over that. And it's not that you have to pay that directly to us, because we're working in a fund structure, and the fund structure has a unit price and it gets calculated through the unit price. So it's not that people have to draw open their wallet every time that we will make a profit. It's calculated and you will see it in the app very transparently.
Okay, yeah. So it's a very typical kind of revenue or performance-based kind of revenue model for a business like yourselves. Yeah.
Yeah, it's fairly typical, and to be honest, I think that the industry should more look at performance-based models, because a lot of the industry is based on, even if they do nothing, they still get paid. And last time when I hire someone to do something in my house, I expect them to actually do something and get a result rather than hang around my house, right?
Yeah.
And
Sure.
I think in the financial industry, it's such an old model. We need to disrupt it.
Yeah. So another question here at the top. We got how is Unhedged different from other robo-advisor apps out there?
Yeah.
As well. Yeah.
Yeah. So how is it different? Well, first of all, we don't use static models. So most of the robo advisors out there, they use static models where they have X% in a ETF, and then they rebalance every few months. So we are far more flexible and more agile when it comes to market changes. So that's one thing that's very important. The other difference is that, and I hope they don't listen because I might give away too much, but I believe that the way these apps onboard their customers can be improved a lot on. And often when people onboard people in financial apps, what happens, you have to give all your details, including your TFN or including your address and whatnot. And then they say, give me your money. But I don't know if I love you yet, right? So show me some love first. Show me, build the relationship. So I don't think, and that's my experience in other industries I worked in, we can make the onboarding journey far more efficient and far more user tailored. I think
Excellent.
that's a big difference.
I think that is a question, actually. I suppose a later on question from that is, like, how do you plan to acquire your users more generally?
Yeah, it's a good question, because there's we're in a very heavily regulated environment, right? And in this heavily regulated environment, you cannot easily compare yourself to others. So you can't advertise we're so much better than this person, especially when you do things that haven't been done before or that are a little bit different from the other players. So to answer your question in short, I believe at one point we have to get the flywheel going, and then our our customers will show their results to their friends. And who doesn't want a better result? So if the result is better, then they will get the friends on. So there will be methods that gives us easy way to share stuff. That's one. And the second is just when we are growing up, and when this beautiful baby becomes a big person, we can work with other players, right? We can work with financial advisors, we can work with other asset managers, or even work with other players that want their execution improved. Because in the end, we're a tech company that delivers algorithms for funds, right? So you can imagine that there's other revenue streams in the future, but it's too far ahead to speculate on that. So let's first concentrate on onboarding as many people as possible who are willing to try a different type of investment.
Yeah, I think with your marketing background, I did spot in your offer document that's been circulating amongst the team, the diagram that you show, particularly around each of the ways and targets for customer acquisition. So I think that will help. I think that answer that question. I think whenever, particularly your expressions of interest, will get access to that draft offer document. So
so what you refer to is that I say I usually follow a 10x model. So every 10x your channels have to change. So if you from 500 to 5,000 customers, it's a different path to get there than from 5,000 to 50,000. And so you just have to adjust your channels, you have to adjust your marketing, you have to adjust your messaging and your distribution channels. And yeah, I'm very aware, and
Yeah.
I am super excited that we first have a very strong team in the marketing department, as you have seen, but also that, yeah, the messaging we are doing really resonates. And that's for me a very important thing in there.
Yeah. You've definitely got some key people, I think, in your digital marketing team, particularly from the consumer background. I think can maybe talk to some of the strategies that you're using. So let's maybe move along. There's quite a few questions maybe related to investment.
Yes.
And some of these details will come through in the offer document, but could you maybe talk to the investment limits, like what investment
Okay, yeah, that's a good
minimum? Yeah.
Yeah. So for customers to invest into the algorithms in the end, it will be very low minimums because we use a fund. It doesn't matter whether there's 10,000 people putting $100 in or one person putting $50,000 in. It gets run by the algorithm on its own. So we haven't decided exactly the minimum, but it will probably be around $100 to start. But I think the interesting question that Chirag Patel stated is, what is the maximum of the algorithms? And I think he basically indeed hit the nail on the head. What we're doing is low frequency algorithms. And low frequency algorithms, they are not interesting for the big players in the finance industry. And by definition, they also have a lower capacity. The capacity, we have determined the capacity of the algorithms based on that we can never trade more than 2% of a volume of any asset, which means that we can easily calculate our maximum in the current market. And the maximum of the lowest algorithm is about 200 million. And of one algorithm, the maximum of another algorithm is 1.5 billion. When we get to these numbers, I'm sure that my team created a whole bunch of new algorithms that have different capacities. So yes, at the moment we're limited, but I don't think we hit that maximum in the next year.
Okay. Well, it could be a big problem to have, or a nice problem to have.
Yeah. We love to have those problems.
Yeah. There's another question around the algorithms. I think there's a lot of interest in this more generally and getting more information and insight, and it's really good that you're sharing this actually with the group. Chris?
Alan, one thing I want to say is that we also looked at what is how can we be different than other players, right? So and one of the things that I really want to be is open about how these algorithms work. So in the app, you actually can read about them and in pretty high detail if you want to, because most of it is based on academic research, and these are known factors. It's hard to do it in your own account. It's easier for us to do in a big context, but we'll be very open, and I can be now more open about some of these algorithms than I used to be, because I used to work with other funds and with private individuals, and they don't want to share anything, rightfully so.
Yeah. Chris, here is a question. You may have covered this a bit, I see, but maybe for new people coming in, has the algos been tested with real money rather than just back tested?
Yeah.
Is there a track record? Yeah.
So the track record. So we have tested most of the algorithms with my own money, and the problem with this is this: when we found an improvement, then we put the improvement through and then retested, redeployed with real money. That means that there's no continuous record. And so that's why I fall back on, well, the current version of the algorithm. This is how it would backtested look. So the results were similar in my own trading accounts, but it would be imprudent for me to publish the result of my own trading account, because then I would immediately say to all the clients, this is what you can get. It's still investing, there's upside and there's downside. And anybody who says it's different is lying.
Yeah. So another question here on that is maybe a follow-up question is, like, is this seen as more risky than bonds? Or where does the risk profile of this investment sort of sit? It says here, is unhedged more risky than managed funds with shares?
So risk has a lot of metrics, right? So I will publish all the risk metrics in the offer document. So it would be a little bit, but if one question was, is it more risky than bonds? Yes, absolutely. It trades shares, it trades ETFs, right? So it's absolutely more risky than bonds, but we also trade bonds. Right? The only thing is, what we believe is that because you combine different return streams that have a different hypothesis on how the market works, if you combine those return streams, the end results become more smooth. But that doesn't mean that it cannot go down. But the thing is, if it goes down, then we don't get paid. And so we have to be very sure that what we're doing is actually profitable, because otherwise we don't have a business.
Yeah. All right. Do you see questions that you want to pick up yourself, Peter? There's quite a few here. There is a few questions just generally, like particularly on projected revenues and maybe results of some of your own testing. I think maybe we'll take some of these offline, because I think it could be in the pursuit of balance. It's probably better that, but we'll collect these questions as well. Anything that we don't cover as well, just for anybody that is adding questions, we will respond to all questions, and afterwards we'll do a follow-up with anything that we didn't cover. But keep on asking your questions. There's loads here to get through. But do you see any questions that you can pick up quickly? Yeah,
it's one of the last ones. Is what's your view on the current sentiment among retail investors, algorithms versus professional investors? How you're planning on conveying to the market the benefits of algorithms compared to human judgment over a longer time horizon? So the power of algorithms in trading is not unilaterally positive, right? So there are funds that tried it and didn't do it well. What often happens is that when you have these very advanced funds, they use leverage, they use shorting, and they use a lot of advanced instruments like futures, options. We don't do that. We are in that respect, we are more run of the mill. How do we convince that algorithms are better than people deciding? Well, algorithms don't have emotions. And if you look at most of the research of why customers, why investors underperform, it's because of the emotional bias. And as you have emotional biases in, for example, if you bought a stock, you suddenly like it more than if you didn't buy a stock. If you are losing money with a stock, then it feels more painful than the pleasure it gets from winning. So there's a lot of emotional biases in people, and algorithms are devoid from emotions. They can read emotions in Twitter streams and in other streams, and they will use them. But they're devoid of the emotions themselves, so they're far more rational in taking decisions. Okay, that's one. That's one part of the answer. The other answer is, can an algorithm an algorithm could never, for example, suppose that there's a comet hailing down on our planet, right? And we see this coming for 2 years, and NASA warns us. An algorithm would see that. Right? Another, if you don't tell it what to look for, it won't find it. So it's a little bit of a double answer. The AI and machine learning technology is going fast. Is improving in such a fast way that in several years, a lot of processes which we need humans for now to think about, we don't have to think about anymore. They are decided by computers. And more decision making in the financial services will be made by computers. And so I think it's a natural progress. Will people always be independent? Will people always, won't there be people that do better than an algorithm? Yeah, sure. Some people have insights you cannot have. But it still means if you can invest without emotional bias and without what the things that make often investors a bad investor, you will do better with an algorithm.
Maybe switching it from the algorithm and the technical details of it, maybe back to like investing into unhedged. Yeah, I can tell.
Like a propeller head.
I think the audience here as well could talk about it all day. I think I just want to bring it back to investing in unhedged itself as well. There's a question here that's not so much referencing projected revenues and things, but a question around users to make the business viable, I'd say. And I think this is a good question. Like, where is the first milestone that you're hoping to achieve, particularly from onboarding retail investors into the fund? Like, where do you think it becomes sustainable, and where do you think is that point? Yeah.
Good question. Like the sustainability depends on the total. So it's basically two factors, right? So it's a total amount of funds under management, and the amount of performance we can do over the benchmarks we take. So a question about benchmarks, they're for each algorithm different. So you can grow a business to profitability really quickly, let's say in a few years, if you do not invest further in expansion into vertical or horizontal business. Yeah. So if we would have a business that's purely based on this, and the markets and the algorithms function properly, then we would expect to be break even around 50 million under management. You can calculate that back. If people invest $10,000, then that would be 5,000 people. But I think what we have here is an opportunity which is broader than just bringing this opportunity to retail investors. When we have proven that our algorithms are better at reacting to the market, then there's no reason why we could not deploy that part at other funds, right? I mean, we could find a way to make money there. We could also, this business we have built in the technical point of view from day one to be able to expand. So we made it that it can handle multi-regulatory environment, multi-language, multi-broker, multi-fund manager. So we made our technology such that we have all these building blocks we can put together in a different way, in a different geography, with different markets, with different algorithms. So without doing too much speculation further in the future, I feel that this business has succeeded when we are able to prove it can roll out in other geographies, and it can do that properly. And then we can see an acceleration, because Australia is a relatively small country, right? and there's so much more out there, and I think there's a lot more investors in the world that would love to see a different type of investing available to them. Is that answering your question?
Yeah, absolutely. I think there's one other kind of follow up to this. Like, what's your target for the first year, right? In terms of funds, I suppose funds under management or number of customers?
Yeah. In our models, we have said 500 people by the end of the year we want to onboard, and I believe we can, if I see the interest in virtual, if I see the interest in the waitlist, if I see the interest in other people who are spontaneously calling me after the article in the AFR, I think we can do that, absolutely. But my team is a very mature team, which is super ambitious, and so it's not that we would rest on our laurels when we had 500 and we put the metric somewhere else.
Yeah,
this is a business. It's a once in a. It's a this business has a particularly advantage. It has a good team, and it has and the environment is different than normal. This is a low interest environment. In a low interest environment, people, when they save, they basically lose money. So you have more and more people looking for alternative ways to deploy their money to make more of it. And I always say, I don't think the lawyers are always so happy with that, but I always say I would love to see Unhedged helping people to give more opportunities to their children to buy this bigger house that they dreamed of, or to retire earlier, right? So I'm really enamored by this financial fire movement. Financial independence, retire early. I don't think people want to actually retire, but they want to be financially independent. And if we can be a stone in the wall of financial independence for everyday Australians, we're winning.
yeah. Ash, maybe throw back to you. Have you seen any questions in social as well, or any other questions for Peter? Because I'm mindful of time here as well. So
Yeah.
We've just had a few questions that talk about the exact same thing. Peter, just for you, what is Unhedged's biggest goals, and also basically what's next for you as a business?
Wow. Well, so what's next for us is this. So what we have now is we have a app that is in beta testing. It's just with our team, and so we need to launch that app. If you know how it goes, you submit it to Apple, then it gets rejected, submit it to Apple. So you cannot really say any defined timeline, but I expect somewhere in July we might be able to launch the app. That's a very important moment, because then we can say, here it is, here we start. And then we start onboarding people. We start onboarding capital first, capital of my own, capital of people close to me, just to seed the funds. That's the next step. And then we just start to onboard people. And I'm a very data-driven person, so I want to see behavior. I want to see what people like, what they don't like. I want to see people staying with our service. I mean, you have a certain target of acquisition rates. You want to see the people sharing it, and the better we can do in all of these metrics, the easier it is to acquire people. But the next step is really, for me, I'm really stunned by the attention we had through virtual. It's close the funding round, get some more people on board, and really accelerate. Really go from crawling, walking, running. And I really feel that we are bringing something really different, and it won't be an easy road. Nobody says businesses are an easy road, but I really feel that we're getting to the point that we can roll the boulder downward and start steering it in the right direction.
Excellent, excellent. Okay, I'm mindful that we didn't get through probably half of the questions, and just for Brett, Ron, Paul, who else have we got here? Peter, Nick, C, Ron.
Lots of good questions.
Yeah, Sean. Yeah, anyone that has added questions here, we'll do a follow-up on these questions, particularly ahead of releasing what we call the draft offer document. If you have expressed interest, and hopefully most of the audience here has, you will get access to the draft early. And there is a hope that we can open up the offer early next week. But definitely express interest, follow the profile, and also reach out by email, any follow-up emails that you receive from Unhedged as well, and any other questions that you have. And I'm just going to hand over back to Peter for any last comments. So anything we missed that you think it was important to cover, and what next for the audience?
Yeah, so what next? I mean, the main thing is that we are, and I'm really serious. This is not kissing you, Alan, but this platform has been for us such a enormous traction. We didn't expect this result, and we also see that we have a limited amount we can raise, and we don't know what to do if we're oversubscribed, but it's yeah, I would say just get on the list, and together we'll make this company work. I think is what's really cool is that we can be here. You can be part of a company and a company's future, and then you can use the product as well. I mean, that's pretty cool, right? And that's a lot of your raises are about that. But I think we could be with people for a very, very long time. And so I would say, yeah, just sign up on the waitlist on unhedged.com.au and go to the virtual side, look at the Unhedged page, see if you like it, see if it's for you, right? Because it's not for everybody, but if you like it, just pledge. We'd love to have you on board.
Excellent, excellent. Well, let's wrap it up there. And as I say, thank you very much, Peter, for taking the time out to chat to us.
You're very welcome.
And yeah, let's hope we can get the offer open and get it funded ASAP. So.
That would be awesome. That would be awesome.
All right. Thanks, guys.
Very much, Peter.
Thanks, Ash.